Hello, today is February 25th, 2017. My last call, so we had mixed indicators on Thursday. The commonest thing would be a gap outside of the day's range. Next most common would be closing little change. Both of these don't have to happen, but they did. We closed about 3.5 handles up. 3.5 handles is within my range for closing little change. We also had a gap outside of the range. I said it was most likely the gap would be under this low, and it was. I gave two possibilities after that. I said if we undercut this low at the bottom of the first hour of trading, we had lower to go, but I said a recovery was possible as long as it began promptly, and that's what happened. During the day, MEJT said ultimately higher price would print, which they did. Said that false move would retrace, this false rally would retrace, and all those things have happened. Once again, we have mixed indicators. I think the most likely thing is that we have a gap outside of the day's range, and next most likely thing is we close a little change. I think the most likely thing is the gap is going to be up, but if it isn't, it's big trouble. So let's look at some indicators. It's usually positive when you start out low and rally all day long. It is in particular positive when this happens on a Friday. Almost always it carries over into Monday's open. This drop here was rejected, so it's a rejection of the break of these lows. Unless we gap up very sharply, I'd be cautious because we could have a rejection of the break of the highs. We have a daily pattern which tends to hit a high after just a few minutes of trading if it breaks up. It would also be bar number 13 of a combo sell signal on the 130-minute chart. These haven't worked that well, but they do work some of the time. So if we gap up and we hold it, I think we have higher to go. We had a Fibonacci target for this leg of 24.79. We have had a recycle of the sequential sell signal on the weekly chart. Usually when these signals fail, they do so in grand style, but if it recycles, there's no such implication. It just means one has to start counting over again. If we exceed 24.82.25, then there's no recycle, and we should continue going higher in grand style. This is awfully close to the 24.79 price target that I had previously. So the odds are we have a gap outside of the day's range. I think it's most likely to be higher. If it's sharp and held, we could go higher, but there's a risk if it's only brief and we undercut these highs that it's not going to stick. Now, what if I'm wrong? What if instead we undercut this low? Well, that's not impossible because we have a wall into the close and we have a Hobson close right at the high of the day. If this weren't close to an all-time high, I'd say that was a good sign that the retail customers were just going long with abandon, and usually they get punished fast and they get punished in grand style. But when it's this close to an all-time high, it only works about half the time. What if it works this time? Well, there is a valid count here which has 5 waves up being complete. Here's your 1, your 2, your 3, your 4, your 5. The internal wave counts all work. You'll notice wave 1, and wave 3 are quite equal. If you look at wave 5, it's right at the 50%. And what's really interesting about this is if you take wave brown A and take 127.2%, there's wave brown C right on the nose. So if I get surprised by this, and if we gap under If we gap under this low, this means the rejection of these lows was a false move, and it could mean that this leg of the rally is over. It's not my first choice, but if we gap under this and we add to it, that's what I think is going to happen. It could be big trouble. So Monday's open should be interesting, and that's today's call.